Yeah, hello and welcome to another update video about Bitcoin. Bitcoin, I've made a slight change to the chart, to the higher level assumption. It doesn't really change the direction. It just tidies the chart up a little bit and allows for more space to the upside, because I think we will see a bit more upside movement in Bitcoin. And in this video, we will take a look at the key levels. We're just taking a look here at the higher level assumption that we talked in previous videos, but because we get so many new viewers as well, I just want to share with you my view of the Bitcoin chart. My view is, as per the Elliott Wave method, Bitcoin created a wave 1, the larger wave 1 here in April 21. It peaked. That was actually the bull market high. Then we came down in a wave A. We moved up in a wave B, which is, as per the Elliott Wave method, a corrective wave. It was already part of the correction. And then we are now coming down in this C wave, which I think it could be finished. The low could be in. I'm specifically allowing for that option, but at the moment I need to see more evidence. And my point is, again, I know it's sometimes hard to understand, but my point is that there are charts out there which most likely have bottomed. Bitcoin, just by applying the Elliott Wave rules, by looking at the chart structure, it just doesn't look that likely, which doesn't mean it couldn't have happened. Bitcoin might have bottomed. I mean, we talked on this channel about the pi cycle bottom indicator, the hash ribbon indicator. We're talking about the rainbow chart, all these long-term buy signals. But I couldn't sit here and confirm to you that the bottom is already in. I've got a much better feeling to confirm that for Ethereum. Even though there it's not 100% guaranteed, nothing's 100% guaranteed, but it's just much more likely. Bitcoin, not yet. Okay, I need to see more, which doesn't mean I wouldn't accumulate Bitcoin. It's a completely different story, but it is sort of, my view is the wave down isn't complete. But the point is here that this was a wave 1, in my opinion, an impulse up, and the ABC is the wave 2. After that, we should see a wave 3 that could take us, into the region of 116K and more. In a third wave. We talked about that in the member live stream, not last week, the week before last. So what is important now is we are here obviously in this C wave. The C wave is a 5-wave structure. It is an impulse, or you can count it as a diagonal. That doesn't really matter too much. Let me just, you might see it better on the log chart. Doesn't really, let's leave it like that on the linear chart. Now the point is, my view is that this here was a wave 1 down, bottomed at around 33K, moved up in a wave 2, we came down in a wave 3, moved up in a wave 4, and we're now coming down in the 5th wave. Each of these waves can be counted as an ABC structure, basically as a part of an ending diagonal. The wave C can be counted as an ending diagonal. The chart allows for that option. What is an ending diagonal? Well, you don't need to go too much into it, but the point is that all of these waves can be counted as 3-wave structures. So if one of them is the first one, if the first one is counted as a 3-wave structure, all of them have to be counted like that. And this is a wave C can be a so-called ending diagonal. Talked about that option before, and now I'm pulling that card, quite specifically. I mean, we talked about that before anyway. But here, my view is that now in this 5th wave, we also have an A, B, C structure. And in my view, we are now in the C wave. And in this C wave, we've really only done a wave 1 down, and we're now doing the wave 2 up. There will be a 3 down, a 4 up, and a 5 down. Could take us into the region around 14 to 16K, maybe even a bit lower. This wave 2 can move all the way, theoretically, all the way up to 22.8K. But if it goes above that, it will be invalidated. Now, the thing is, it shouldn't really go that high, because if it goes that high, well, it can, but if it goes that high, it is probably not a wave 2 anymore. If it goes really that high to 22.8K, it is retracing more than a wave 2 should normally do. Yes, it's not invalidated. A wave 2 can theoretically retrace 100% of wave 1, which means it could come exactly to that 22.8k level without invalidating this particular wave count. But as I said many times before, if a wave 2 retraces more than the 78.6% fib level, which is here at around 21.8k, then it will already get very unlikely that it is a wave 2. Now you get slightly different prices and levels on the log scale. On the log scale, it is pretty much the 21.7k level. So we just need to be a bit flexible, have a bit of an open mind. 21.7, 21.8k is the level. If we get beyond that, it will already get less likely that we are in this overall bearish pattern, which will lead to new lows. My point here, therefore, is there is still short-term upside potential. In fact, I am still expecting higher prices. We talked in the last few weeks about the potential of Bitcoin to get all the way up to around 21.7k. No problem, but it would still be embedded in a larger bearish chart context. Okay. So we've got here the 78.6 retracement at 21.8k. I think this is a possible peak for Bitcoin. As you can see here today, it came all the way to the 61.8 retracement at 21k. So it reacts to these levels, which again gives me a good feeling about this count. And this is also why I adjusted the count. Didn't make many changes, but I tidied it up a little bit, and it allows for a stronger move up. But we talked about that option that I might need to move this wave 2 up here, which I did now. What else? So if we now zoom into the detail here, really. And by the way, if we really get above the 21.7, I mean, not just a peak above there, not just a wick or something, I'm really talking about a substantial breakout above that level. At some point, I will have to assume that the low for Bitcoin has already been in. And I would then have to say that in this region here, we had a truncated low, which means that the wave 5 was already done here somewhere. Did not go below the low of the wave 3, which it ideally should. But you sometimes, rarely, you get these truncated lows. They are not great. But it only is justified if afterwards you see a strong move to the upside, which to be fair, we are seeing at the moment. Now, if I go into the detail here, what is most important, I think, for everybody here, for most people, is short term. So short term, my view is that from the low here, which was at 18.2k, we moved up in an impulse in a wave 1, came down in a wave 2. We are now in this green wave 3, which I think is not quite complete yet. In the wave 3, we've got another sub count, wave 1, 2, 3. I think we've got this now complete. Looks like it's finished or about to finish. Can't rule out it goes a bit higher. Then there should be a wave 4 and a wave 5 up, and that should finish off the wave 3. So as I just said to you, the 21.7k level is an important resistance. This could be a target for the 5th wave. I mean, I can't give you let's say a clearer target, because I don't know yet exactly where wave 4 will bottom, but we can make some assumptions. We take the length of wave 1, and we add it to the low of the possible wave 4 retracement area, and then we get two targets. The first one is 21,185. That's the first target for a wave 5 or 3, and the second one is 21,837. So if we're already there, then we're already above the 78.6 retracement. So again, we just need to, take it level by level, I think. But my point here is, short term, we can expect a little bit lower prices. These are based on the fib retracements, and based on the retracements of wave 3. Looking at the area between the 50% retracement and the 23.6 retracement between 20.1k and 20.6k, with the 38.2 retracement level being the ideal level for a wave 4. That's at 20,321. Then we should move higher in a 5 to finish off wave 3, coming down in 4, moving up in 5. And as long as we stay below the in an extreme case, really, as long as we stay below 22,800, we can focus on lower overall, right? So, but short term, still upside potential. But again, the point I've been making here in the last few weeks is that Bitcoin has a much less a less clear chart pattern than Ethereum. I'm much more willing to go long in Ethereum at the moment than in Bitcoin, just purely by looking at the pattern. Now, long-term accumulation is something different for me, but really trading, with trading, I'm looking at Ethereum being a bit more attractive, right? So yeah, I mean, I can't rule out this wave 3 goes a bit higher, but as long as we stay below 21K, I think we should get into this region, find support there, and afterwards push a bit higher. Yeah, and that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.